Welcome back. Now, as of today, Jason Quinn is no longer an executive employee at Absa. He leaves the position of financial director at the lender, which he has occupied since 2016, and will step into Nedbank's offices as CEO at the end of May next year, replacing MIke Brown, who has been at the helm since 2010. Banking analyst and portfolio manager at Denker Capital, Kokkie Kooyman, weighs in on this move. Kokkie, it's a pleasure and a good afternoon to you.
Afternoon, yes.
All right, Quickie, is this a surprise to you, to markets at all, that we would see a move of this nature where Jason Quinn is concerned?
Yeah, no, look, obviously it's not a surprise. We know that Nedbank were looking to replace MIke Brown and they were searching quite wide. And yeah, we've actually obviously been asking them as well in terms of which direction they're going. And the answer we got, and very professional each time, is that they researching both internally and externally, and that's good. You know, that is build up a list of candidates, and then in the end the board makes the decision. And interesting that the board decided on Jason Quinn, who is very suitable. He's actually for a year was interim CEO at Absa, and has been a very good and long-standing CFO. He's been in the banking world for a long time. So he's a very good replacement for MIke Brown. And he's actually still young. I wasn't aware he's still, he's under 50. I think he's 47, 48.
I must ask you, Kokkie, succession planning here, because of course, like you said, Nedbank cast its net wide. It looked internationally as well. It looked inside the bank, outside of the bank. And so I'm wondering, how succession planning is supposed to work in this regard. Also considering the Absa with Jason Quinn having possibly being, another person who could have been in line to take over at Absa should Ari Ruchtenbach step back. Does this leave questions about succession planning within our banking sector?
Yeah, a good question. It's interesting when you look at all the large banks have now replaced their CEO. If you Investec a while ago, Fanny took over Absa, Ari Ruchtenbach, and Nedbank now. And then the one that actually is the biggest and who did it very well is FirstRand, with Mary Vilakazi taking over next year. And so it's interesting that you can see that FirstRand is the biggest, and their announcement was also, it came across more professional in the sense that there was a whole range of sweeping changes in the group, and you can see this has been planned for quite a while. Nedbank being smaller obviously doesn't always have that large support staff, and Nedbank, I think, is unfortunate in that a lot of the senior guys who might have been suitable were already at a retirement age earlier and had left. So it's a very difficult thing to get your succession planning right, because to have a good internal succession plan, you need to have at least 3 or 4 candidates, and they must also be young enough and wait and know that only one of them will get the job. So it's a thing that obviously occupies top management at all businesses, especially banks. And what makes banks and insurers obviously more difficult is that on the banking side, you need the Reserve Bank to also approve and to look at your succession planning. So there's a lot of time spent. And interesting that in the end, Nedbank did decide to go for Jason outside. They've got good internal candidates as well. Mike Davis, we rate very, very highly as CFO. And I'm sure they would have looked at him, but decided maybe Jason's experience, having been CEO for a year at Absa, just gave him the nod.
I'm going to get also the importance of a board chairperson in this recruitment game. For instance, if I think back to what happened at Absa between chairperson at the time, Wendy Lucas-Bull, as well as Daniel Malele, that was a bit of friction there that caused the early exit of Daniel Malele. But Daniel Malele would have worked with Jason Quinn at Absa, and now as chairperson at Nedbank, I wonder if that also might have been factored in, that the chairperson knows Jason and what he's capable of.
Yeah, no, I think you're totally right. It does play a big role. Your chair, obviously, in a case like this, because it's your non-execs who make this decision on the board, and obviously the chairperson there plays a very large role. And as you said, in that period when when Absa, when things weren't going that well, and the changes and Daniel coming in, but then moving to Nedbank as chair, where he's done very well so far. So knowing Jason from that period, I think it would have given him more comfort to push for Jason. It's interesting that I've tried to think back as far as I can, and I think I've known at least 12 Absa CEOs.
Sure.
That says a bit for my age. But I think this is the first time that we've got a CEO who was a CEO of two banks, having been a CEO of Absa and now of Nedbank. I'm trying to think back. I think Piet Badenhorst obviously would have, but that's many, many years ago, because he would have been CEO of, I think, the Building Society and then later of Absa. But that goes back to the 80s, I think. So, any case, it's the first time in a long time that you've got a CEO who's been CEO of two banks. And that actually helps a lot, because you've seen another environment, you've been inside, you know what it works, you know the good and the bad. And I think it's very good for Nedbank having gone on that regard with Jason Quinn.
And before I let you go, Kokkie, I must ask you just about, looking at the banking sector as a whole. I actually just spoke to an analyst who pointed out that the banking sector in South Africa is due for a little bit of disruption as we see fintech becoming more popular and prevalent. I'm wondering if, the executive suite that we have across our big banks, so it's across all banks, are able, to really move traditional banks through this new fintech environment.
Yeah, no, so fintech is a challenge everywhere globally. Interesting, I was just reading this morning again, in many countries, India specifically, also in Korea, also in Brazil, Mexico, where your fintechs quickly gained a lot of clients. We see that here in South Africa also with Time Bank and even Discovery Bank. It's actually a bit older already, but it's still a fintech. But a lot of those fintechs actually went for the lower end of the market and gained clients, but gained what we call almost anti-selection or reverse selection, where the clients that left banks and went to the fintechs were the ones who weren't good clients. And so the bad debts that the fintechs have had is very high. And so the fintechs technologically are very good. And it will take time. There will be winners that will come through, but we've seen it globally. Very few of them are really challenging the banks. They're just biting at the edges. And in the end, what will happen, and we've seen that here and there, that fintechs even get taken out by a large bank, or some of them will merge, and then you've got a whole different problem. But I think the question you're really asking is that the world is changing, and technologically it means that banks and insurers who are very data and technology dependent have got to make sure that their apps are very user friendly. And in that regard, Nedbank have done an amazing job. It's taken them 8 years, and with the new Avo and the client interface is actually state of the art. And in that regard, South Africa can compete with any other country in the world.
Well, Kokkie, it's always fascinating to get your insights. Thank you so much for your time today. It's an absolute pleasure. That was Kokkie Kooyman. He's banking analyst and portfolio manager at Denker Capital.